Oil prices are down on news that the American president says the U.S. is close to making a deal with Iran on their nuclear program. All right, for more on what this means to the oil market, let's go to Jeremy Irwin. He's a senior oil market analyst with Energy Aspects. Thanks for joining us today.
Yeah, thanks for having me.
If this deal is made and Iran's oil market does get opened up, how much of a monumental shift could this be?
It would be significant. It's not our base case. We still expect, the U.S. to apply some maximum pressure on Iran. But with the OPEC plus accelerated unwound already occurring, and if these Iranian barrels stayed on the market, you're definitely looking at an oversupplied market in the second half of this year for global crude markets.
Do you think it could be something that happens that quickly?
Look, we still feel like uranium enrichment is going to be the biggest obstacle. And we think Iran is incentivized to have these negotiations play out longer to avoid, military enforcement or stricter sanctions from the U.S. So we still think this negotiation will play out over some time. So we're not expecting it to happen overly quickly, but it's definitely a risk we're monitoring for global balances.
Okay, so looking at it from the perspective of our country, I'm wondering what it does for competitiveness in the energy market.
Yeah, I think predominantly Canada exports heavy crudes. So you'll have a little bit more coming back from Iraq with the accelerated OPEC plus unwind, but it doesn't necessarily put punitive pressure on Canadian crude differentials, but it does put pressure on global benchmarks, which those differentials are priced off. So we would expect, prices to be in the low 60s to mid 50s, potentially even lower if you have this accelerated OPEC plus unwind and Iranian crude staying on global markets.
The way that OPEC has been working, I'm wondering whether you think they would start dialing back and turning down the taps.
I don't think so. I think when you look at how much work Saudi Arabia, by and large, has done to get global oil inventories to low levels where they are at currently, and if you look at Q3, which is, seasonally the strongest period for oil demand because you have additional oil burn in the Middle East for air conditioning, as well as you have peak driving in the Northern Hemisphere, they are unwinding the supply into a fairly strong fundamental market in the here and now. So the builds probably are delayed until, say, Q4 of this year.
Okay, so let's talk as well about expansion in this country, given sort of how the outlook is changing around the world and how quickly it seems to be changing, because as you know, there's been a push to build more pipelines, get more of the product out to the coast, get it out to international markets. Do you see that being supported if we see a major player like Iran get back on track?
I think what we would anticipate is for U.S. shale and some more of the short cycle production-oriented basins to be the balancing mechanism in a weaker global balances picture. So what I mean by that is that a slowdown in U.S. production growth, less shale production coming out of Argentina as well, you're not going to see the impact on the longer cycle crudes like the Canadian oil sands or, say, offshore Gulf of Mexico production.
So we'll see shale ramp down.
Yeah.
Okay. Anything else as far as production that needs to be taken into account, do you think, for latter half of the year besides Iran?
I think we've done some modeling around, say, non-OPEC supplies in Brazil or the North Sea, and we do see a lagged impact on that production should you be in a sub-60 price environment, but it won't be as immediately reactionary as U.S. shale is. So that's sort of a longer lead story. Say if you had 3 to 6 months of very depressed pricing, you would start to see those supplies come down. But U.S. shale could be more reactive to the tune of, 2 to 3 months. You would see CapEx get taken out of those upstream budgets.
All right, Jeremy Irwin, we will leave there. Jeremy's a senior oil markets analyst with Energy Aspects. Thanks for that. Coming